Hey there traders, thanks for joining me for this free video from thestockbandit.com. I'm sure that you've been enjoying your Easter weekend and hope that you're able to make the most of it and have some fun and spend time with those that you love the most and get ready for a brand new week of trading. So we've got a 5-day week of trading ahead of us again after a holiday shortened week last week. We saw the indices give back a little bit of ground last week, but nothing real technically significant took place. Let's walk through the indices one by one. I'll point out the key levels that I think belong on the radar as we head into this week. Now the NASDAQ, recent support has been around this 30.45 area. We pulled back to test it on Wednesday, but we held above it. We've also kind of had this 30.90 area pose as both resistance and support. We've seen resistance here a few weeks ago. It then turned into support here as it was tested for a few days, and in the last couple of sessions it's turned into resistance again. So that's not a major level, but it is kind of the midpoint of this range, and it's interesting that that continues to be kind of a point of interest for this index. Now up above we've got the highs at 31.34, and so at this point we're still range bound between this 30.45 area and 31.34. So we'll call it a 90-point range here. If we are able to exit the upper end, then obviously we would project the height of this range to the upside and look for a move of that magnitude. But at this point we're still channeling here, still moving laterally. The market's just kind of resting and basing, so we need to allow it some time here. Don't jump to any conclusions until we get a good solid break either through support or up through resistance. Now for the S&P last week, we saw this index give up 11 points just like the NASDAQ did, which was slightly more on a percentage basis, but it was still, in the case of the S&P, less than 1%. We're still caught between a couple of areas here as well. 1388 has been support. We tested that last week, and we've held it on a closing basis, and then we've got 1414 right up here, which we've made a few attempts to clear to the upside, but none of which have failed. In each case, both times we've been able to close above that level, we've given it right back on the next day. So 1414 is still the level to watch for the S&P. Now if we are able to push through there, then we've got room to 1440 as kind of the next level on the chart from 2008. For the Russell, we've seen these two levels really be important, and they are still in play. 815 is where this yellow line is. And currently we're holding just above that after testing it the last couple of sessions. And then we've got this white line up here at 833, which again, we've made a couple of attempts to clear, and in each case they have failed. So every time we've gotten through 833, we fall back into this range between 815 and 833. We're also kind of hugging this uptrend line that goes all the way back into October. And so that's a key trend line right there. But as price moves laterally, it will ultimately break this rising trend line. So that's nothing to be really alarmed at unless we first take out 815 and then move through this prior low at 785. So those are kind of the levels to watch here should we happen to weaken further. Otherwise, keep an eye on this 833, 843, and then ultimately 860 from July of last year right up here. Okay, and then finally is the Dow, which is really range bound here as well. 13.055 was this 52-week high right here back in end of February. And since then we've seen that level tested over the last few weeks. We've also got some resistance up here at 13.3. So we're kind of range bound here between these two levels, 13.055, 13.3. Until we get through one of those levels, we can expect more of this kind of rolling type of price action and really an overall lack of momentum. So stay on your toes out there, stay selective with trades, keep an eye on these index levels, knowing that it's going to influence how individual stocks are going to move. And other than that, keep an eye out for more free videos coming your way from us. I hope that you've been enjoying some of these. I don't know if you got a chance last week to watch the When the Bell Rings episode that I put out. If not, go ahead and check the blog at thestockbandit.net for that. You can see that. I will have more of those coming out as well. So thanks for joining me for this episode. I'll have more for you soon, but in the meantime, trade like a bandit.